Hi, I'm going to talk about sugar today. Now, most of the time I trade currencies, Forex, stocks, metals. Sometimes I trade some commodities, but we're going to talk about sugar today because I've got a short position on sugar, and I'm going to tell you why. And it would be interesting to hear what you think because I'm relatively novice to this. I'm looking at it from a technical point of view, but I'm going to delve into some of the fundamentals whilst we're here. Now, I've got this site called barchart.com, which is really good. I'm thinking of subscribing. And it talks about sugar going into 2023. A couple of the salient points are that there's some frost in Louisiana, which is putting pressure on upward pressure on prices. Um, we've got some problems in supply in Europe and production in Europe, etc., etc. There's a seasonal chart on here, which shows that prices generally tend to escalate at various parts of the year, and we've just reached a high point, which is December-ish, which is in the northern hemisphere. It's winter, and sugar becomes a bit low, and also it's a kind of growing season in the southern hemisphere, which is where most of the sugar comes from. And the harvest normally begins in sort of autumn in the southern hemisphere. So that's when prices historically tend to drop. But if you have a look at what's going on, there's actually, and we'll talk about the commitment of traders in a little bit, but if you have a look at what's going on behind the scenes, there's a bit about frost and so on. But the bearish factor for sugar prices, which they've very kindly put up here, is that there's news from India that they've got a production surplus, and also they're thinking of releasing a bit more sugar for export to the rest of the world. And Brazil, which is the largest producer of sugar in the world, has increased its sugar export, its sugar output. And so we've got more sugar coming from Brazil. We've got potentially more sugar coming from India. Those are the top two producers in the world, along with Thailand. And number 5 is the US. So frost in Louisiana, probably not such a big deal. So we've got high prices at the moment. We'll have a look at the charts. And we've got a few problems here and there. But overall, looks like we're going to have a glut of sugar going into the new year. Now, if we have a look at we need to actually switch tabs. So let's have a look at one more thing I want to show you here. Before we do that, let's quickly go back to have a look at the commitment of traders. Now, commitment of traders data is available online, and they've actually kindly put it all together here for us in a summary. And let's have a look at that. And this is called the COT report. You can get it from, I can't remember which website it is now, CFTC or SEC, one of those US websites or organizations, regulatory organizations. But here's an interesting thing here. We see that, so we've got commitment of traders. These are basically traders who are committed to these positions. We've got commercials, and these are the long positions. These are short positions. They have roughly double the number of short positions compared to long positions. The same with producers, about double short positions compared to long positions. And you can see they've reduced, the long positions have dropped since the last number came out, and the short positions have increased quite significantly. The managed money, people like me and others who trade money for a living, are mostly on the long side, actually overwhelmingly on the long side. Now, remember, these are people that follow trends. These are people that momentum traders. We've had a breakout. We'll have a look at the charts. We've had a breakup above recent highs, and we've got a lot of positions going long on managed money compared to the commercials and the producers who are short. Now, I think the real money is in the commercials and the producers. These are the people that know what's going on with supply and demand, and they're positioning short, whereas the traders, the momentum players, the market players, the market gamblers, so to speak, are trading long on momentum and the recent breakout. And then we've got a few others here. We've got the dealers. Well, the dealers will reflect what's going on in positions that are being placed by traders, and a few bits and pieces, and non-commercials, overwhelmingly long as well. But these are the two key numbers: commercials, producers, they're short, and the managed money, the traders, the speculators, are long based on momentum and breakout. So what we want to do is switch to the next tab, and that is the charts. So here we have the chart. Now I need to share this tab. Yes, I think that's working. Fantastic. This is the chart going back. This is just the sugar price on Oranda. It's one of the best ones I can find for now. You can see we're not at anywhere near all-time highs. We're not even at the October 16 high, but we are at recent highs and well above the average, which is probably this 200 period moving average, this purple blue one, which is at around about 15, 16 cents per pound. And we're at about 21 cents per pound right now. So we're about 25%, 25% above the average, which is kind of in this region down here. So prices are quite escalated. Now, if we have a closer look, this is a weekly chart. You can see we've broken up above this year's high. So this is going back, actually, including last year. We've broken above this level here, which is a double top. We've broken above it. We've got some momentum going upwards, and we're reaching the highest price at the moment since, well, 2016. Now, notice we're at 2016 levels, and in 2016, we see a head and shoulders reversal pattern taking place. We're right at the shoulder level of that head and shoulders right now. So that's an immediate area of supply and demand, an area of interest for traders going long or short. And this breakout that we've just had has actually just taken us up to that level. So that's a little bit of a caution for those going long. But and for those going long, the impetus or the motivation to go long is the breakup above this double top. But I spotted something which I'm going to show you on my Twitter, which actually shows that this is quite an interesting pattern that we're seeing right now. So let's go across to the Twitter feed, and I've got a couple of things here. First of all, this one at the bottom, let's see if we can get that. This here is something I put up on Twitter December 21. It's now December 26, so 5 days ago. And this was my projection. There's that head and shoulders. Okay, I've just talked about that. There's the breakout above the recent high. We've also reached the 78.6% retracement level. It's a really important Fibonacci level, 78.6. Often when the market's given up on a direction, we've broken through the 38, we've broken through the 50, we've broken through the 61.8, then the market often gives up. But we often turn at the 78.6. That's where we are now. And it's also the shoulder line of this pattern from 2016. And we're in an oversold situation, overbought rather. And we're in this circle right now. And this is my idea, this red line that I've drawn in. Now, if we have a look at, let me just go back here quickly. If we have a look at this pattern that we've got on the charts right now, this is just taken from the charts I've just shown you. This pattern here that I've put in the square zone, which is where we are at the moment, is very, very similar to the same sort of pattern we had at the beginning of the year. And you can see what happened. We had a high, we had a breakout to a new high, pulling momentum traders into a long situation. We've got exactly the same thing. We've got a high, a breakout through that high. And as we've seen from the commitment of traders, we've pulled traders into the long position. And that's where we are at the moment. Also interesting about this pattern is you can see the moving averages look very similar. Take a moment to just pause the video and see where the moving averages are. I don't want to go into too much detail, but very similar arrangement of the moving averages. And also the biggest volume candle in both of these periods was on the short reversal that took place prior to the current high. So here, if you look at the square, we had that high, drop down, another intermediate high, drop down, big bearish candle, big volume on that bear candle, and then the move up before eventually moving back down again. The biggest volume in that period was on that bearish reversal candle. If we have a look at to where we are right now, we've got the same thing, high, faffing around a bit, a little bit of a move higher, back down again, and then up again, big reversal. Look at that volume candle right there where the arrow is. Biggest volume was on that bearish reversal candle, and then we've moved up to a new high. Very similar patterns, this one and that one, almost identical. And well, I'm short, I'm bearish on sugar. I'm allowing for it to move a little higher, but we've got all that fundamental news coming out from frost in Louisiana, limited supply in Europe that might need to import into Europe, putting a little bit of demand and pressure on upward pressure on prices. But we've got India coming online, bringing some new sugar into the market, I suppose you could say it like that. And we've got Brazil increasing output going into the next year. And we've got harvest season coming up, I suppose, starting around March, maybe, end of February, March, April. That's when the harvest starts traditionally in the southern hemisphere parts of the world. So that's sugar. I'm short. That's my analysis. I'd love to hear from you guys who trade sugar, particularly, but those who trade commodities. I got this idea from one of my members and subscribers, followers, and I'm really appreciative of it because I had taken my eye off sugar for quite a long time, and now I'm seeing this. I like it very much. So that's a concept of sugar. And to remind you of what the chart looks like, there we are at the moment, and I'm short just about at the current price, 21 cents per pound at that head and shoulders, with an interesting pattern going forward. And if you're interested, just out of your interest, barchart.com. It's a fantastic website. I've just been looking through it. I'm not subscribed to it at all, but I'm going to actually probably give it a go. If you buy an annual subscription, it's only $200 only. It's quite a lot of money, but you can you only pay after 30 days, so you can try it out. I think it's great. And I think this COT, Commitment of Traders info, is great. We've seen the seasonal charts, which I love. And you also get all this commentary, which you can sift through that information. It's just info. It's no real direction. It's just saying this is a reason to be bullish. This is a reason to be bearish. And I think if you read all that blurb, overall, it looks pretty bearish to me in terms of sugar prices. And if you go to the top of this tab, you can look at currencies. There's all sorts of stuff on currencies. You can get the COT report on currencies. And they've got metals and options and ETFs. I'm going to have a good look through it. I think they've even got some sort of signal or indicator thing on there, which is not really my thing. And if you're interested in crypto, go and have a look at one of my videos on crypto I've just put up, how to trade crypto, day trade crypto. I'm overall quite bearish on crypto for the moment. Maybe a bit later on it'll be better. Now, if you're interested in all this sort of information, please subscribe to this channel and also press the link on the right-hand side or underneath this video, wherever you can find it, to my website, and you can join up and get a lot of this stuff as I produce it and become a member and get free trading signals for quite a long period of time. I can't remember what it is. I think it's a couple of weeks. Try it out, and if you like it, stick around. If you don't, well, you can just cancel. So that's that. Hope you have a fantastic day. It's still December holidays here right now, so I'll be speaking to you soon, early in the new year. Good luck for your trading.